In this class we're going to talk about the accounting cycle. It's a very straightforward class, just some general ideas about traditional accounting practice and just to see how terms are used and what they are and how final accounts are built up. So to start, accountants engage in several process stages when preparing financial statements. To get to the final accounts, the accountant must start at the beginning, must look at raw data, raw financial data related to the business, obviously. Must look at this and build up the final accounts from it. So they collect the raw data from original documents and financial statements. So purchases, sales, salaries, equipment, all of them have a financial aspect and it will all be recorded. And it's from this information that the accountant prepares the final accounts. So the original documents may include invoice statements, as I said, purchase notes, salary statements, and others. But these are just some for illustration. Now each transaction is classified into an appropriate journal where it may be summarized. So having collected the information, it goes into an appropriate journal. But all transactions are recorded in a general journal according to their date of transaction. We say it's a chronological recording done by the day. It's like a diary, really. Each transaction is entered into this general journal. Now, postings from the general journal to the general ledger. Transactions in the general journal are made chronologically. We've already said that. However, it may be useful to record the various bits of information in the general journal according to their categories of accounts. So the entries are in the general journal are posted. That's an accounting term for recorded. They're posted in a general ledger according to their type. So now they're in two. They're in the general journal, which is an account of everything according to date. But they're also in the general ledger according to their type. And the general ledger has sections or categories such as sales, expenses, equipment. Now, this idea of a trial balance. All the transactions recorded in the general ledger may be classified as either a credit or a debit. Now, since each transaction must be recorded twice, once as a credit and once as a debit, therefore, collecting all the credits and the debits from the general ledger must balance. So all of them must balance, and that's called the trial balance. Now let's just look at the accounting equation for a second. This is the subject of a separate video, but for the moment we've got assets minus liabilities is equal to equity. Now that's, as I said, it's established in another video. The accounting system is based on the principle that for every debit entry there's always an equal credit entry, and this is known as the duality principle. Let's have a look at a simple account, see how it works. Here's a, let's say, owner's equity account, debit and credit. Now, the bank account. Let's say the owner puts in £10,000 into the bank. Now, the owner's equity account shows £10,000. It receives £10,000. The asset account could be 2,000. So 2,000 debit, which means the computer account receives £2,000. The asset account has given £2,000. So in the bank, the asset section of the bank account spends £2,000, and the asset account showing against the computer, it receives £2,000. So the credit has a debit. And likewise with the owner's equity, the bank received £10,000 and the owner's equity, that account received £10,000. So the debit there is what was in the bank. So the £10,000 credit is reflected in the debit of £10,000 further down. Likewise, the asset account in the bank, it gives out £2,000, so it credits the asset account, which in this case is a computer, which receives £2,000. So if we add up the debits and the credits, the balance. Now the purpose of this class is just to say that the final accounts don't appear from thin air. They appear from the raw data, and the accountant must build up the information from the raw data. Must collect the information first into journals, then classify it into ledgers. In the ledgers, recognizing that every debit has a credit, and therefore a trial balance to check that the two are equal should be performed. And finally we looked at a very simple account here, which is actually done in another video, but we looked at it here as well, just to show that debits and credits balance. So that's all we need to know in this class, that how the information is built up into the final accounts, and that the final accounts are not mysteriously just produced out of thin air. And that concludes this very short video, so thank you for watching.